Introduction to Notarization. Notarization is the official fraud deterrent process that assures the parties of a transaction that a document is authentic, that its signature is genuine, and that the signer acted without duress or intimidation. It serves as a crucial safeguard in legal and financial dealings by verifying identities and ensuring voluntary action. A notary public acts as an impartial witness to the signing of important documents and verifies the identity of the signer. Their primary duty is to prevent fraud and ensure the integrity of the signing process, providing confidence in the document's validity. This process adds a layer of trust and legal enforceability to documents, making them acceptable in courts of law and recognized across various jurisdictions. Understanding its fundamentals is key for anyone involved in financial transactions. Role in financial transactions. In the financial industry, notarization is indispensable for securing high-value transactions and protecting against fraud. It ensures that all parties involved are indeed who they claim to be and that they willingly agree to the terms of the document. Any financial documents, such as mortgage deeds, loan agreements, and powers of attorney, require notarization to be legally binding and enforceable. This requirement provides a critical layer of security for both lenders and borrowers. A notary's role helps to prevent disputes and litigation by providing an independent verification of signatures and intentions. This impartiality is vital for maintaining the integrity and stability of financial markets. Importance and trust. The core value of notarization lies in its ability to instill trust and confidence in documents that underpin significant financial decisions. Without it, the authenticity of signatures and the voluntariness of agreements could be easily challenged, leading to widespread instability. By verifying identities and witnessing signatures, notaries help to prevent identity theft and document forgery, which are persistent threats in the financial sector. Their impartial presence adds a layer of protection for all parties. This process is fundamental to the legal validity and acceptance of financial instruments across state and international borders. It ensures that documents executed in one jurisdiction are recognized and enforceable elsewhere, facilitating global commerce. Notary Public Authority. A notary public is a public officer appointed by a state government to witness the signing of important documents and administer oaths and affirmations. Their authority is derived from state law, which outlines their powers and limitations. The primary duties of a notary public include verifying the identity of the signer, ensuring the signer is acting voluntarily, and confirming the signer understands the contents of the document. They are not authorized to provide legal advice or prepare documents. Notaries must adhere strictly to the laws of their commissioning state, including requirements for record keeping, fees, and the proper use of their notary seal. Any deviation can lead to serious legal consequences. State-specific notary laws. Each state in the United States has its own unique set of laws governing notary publics, including requirements for commissioning, duties, and permissible acts. These laws can vary significantly from one state to another. Notaries must be thoroughly familiar with the specific statutes and regulations of the state in which they are commissioned. This includes understanding acceptable forms of identification, proper notarial certificates, and record-keeping mandates. Compliance with state laws is paramount for a notary. Failure to adhere to these regulations can result in fines, suspension, or even revocation of the notary commission, as well as potential legal liability. Federal regulations impacting notaries. While notary publics are primarily governed by state law, certain federal regulations can indirectly impact their duties, especially when dealing with specific types of financial documents. These often relate to consumer protection and financial crime prevention. Key federal acts, such as the Gramm-Leach-Bliley Act (GLBA) and the Bank Secrecy Act (BSA), impose requirements on financial institutions that may affect how notarial acts are performed or recorded for certain transactions. Notaries must be aware of these broader implications. For instance, regulations concerning anti-money laundering (AML) and Know Your Customer (KYC) procedures, while not directly notary laws, often align with the notary's role in identity verification and fraud deterrence. Notaries contribute to the overall security framework. Uniform Commercial Code relevance. The Uniform Commercial Code (UCC) is a comprehensive set of laws governing commercial transactions across the United States. While it doesn't directly regulate notaries, its principles often intersect with notarized financial documents. Specifically, aspects of the UCC related to negotiable instruments, secured transactions, and sales can involve documents that require notarization for validity or enforceability. Notaries ensure the proper execution of these instruments. Understanding the UCC's general principles helps notaries appreciate the broader legal context of the financial documents they handle. This awareness enhances their ability to perform their duties diligently and accurately within the financial ecosystem. Loan and mortgage documents are among the most common financial instruments requiring notarization. These documents legally bind borrowers and lenders to the terms of a financial agreement, often involving significant sums of money. Examples include promissory notes, deeds of trust or mortgages, loan agreements, closing disclosures. Notarization ensures the identity of the borrower, confirms their voluntary signature, and verifies the date of signing, all critical for the legal enforceability and integrity of the loan. This protects both the lender from fraud and the borrower from coercion. Real estate deeds and titles. Real estate deeds and titles are legal documents that transfer ownership of property from one party to another. Notarization is almost universally required for these documents to be legally valid and recordable. Notarization ensures that the grantor, seller, is indeed the person conveying the property and that their signature is authentic and voluntary. This prevents fraudulent transfers and protects property rights. The notary seal on a deed provides assurance to county recorders and future title holders that the document was properly executed. This is a critical step in maintaining clear and undisputed chains of title for real property. Powers of attorney. A power of attorney, POA, is a legal document that grants one person the authority to act on behalf of another in financial, medical, or legal matters. Notarization is often required to ensure its validity and acceptance by financial institutions. Notarizing a POA verifies the identity of the principal, the person granting authority, and confirms their mental capacity and voluntary consent at the time of signing. This prevents exploitation and ensures the principal's true intentions are honored. Financial institutions typically require POAs to be notarized before they will accept them to conduct transactions on behalf of an account holder. This protects the institution from liability and ensures the legitimacy of the agent's actions. Affidavits and sworn statements. Affidavits and sworn statements are written declarations made under oath or affirmation, used as evidence in legal and financial contexts. Notarization is essential to attest that the statement was made truthfully and voluntarily. The notary's role is to administer the oath or affirmation to the signer, ensuring they understand the legal gravity of their statement. This process adds credibility and legal weight to the declaration. Preparing for notarization. Proper preparation is crucial for a smooth and efficient notarization process. This involves ensuring all necessary documents are complete, legible, and ready for signature before meeting with the notary. The signer must bring valid government-issued identification that meets the notary's state requirements. Common forms include a driver's license, passport, or state-issued ID card. It is also important to ensure the document is complete, with all blanks filled in but unsigned. The notary will witness the signature, so the document should not be pre-signed. Verifying signer identity. Verifying the signer's identity is the most critical step in the notarization process and the notary's primary defense against fraud. The notary must be certain of the signer's identity before proceeding. The notary must carefully examine the ID for signs of tampering or alteration, compare the photo to the signer, and verify the signature. If there are any doubts, the notary must refuse to proceed. Administering oaths and affirmations. For certain documents, such as affidavits and sworn statements, the notary must administer an oath or affirmation to the signer. An oath is a solemn promise to God, while an affirmation is a solemn promise based on personal honor. The notary must clearly ask the signer if they swear or affirm that the contents of the document are true. The signer must respond audibly and affirmatively, typically by saying "I do" or "yes." This act legally binds the signer to the truthfulness of the document's contents, making them subject to penalties for perjury if the statements are found to be false. It adds a critical layer of legal enforceability. Completing the notary certificate. After witnessing the signature and verifying identity, the notary must complete the notarial certificate on the document. This certificate is the notary's official declaration of the notarial act performed. The certificate must accurately state the date and place of notarization, the name of the signers, the type of notarial act performed, example, acknowledgement, jurat, the notary's signature and official seal. Proper completion of the certificate is crucial for the document's legal validity. Any errors or omissions can render the notarization invalid, potentially causing significant legal and financial complications. Recording notarial acts. Most states require notaries to maintain a journal or record book of all notarial acts performed. This journal serves as a permanent record and a vital tool for accountability and fraud prevention. The journal entry typically includes date and time of the act, type of act, exampled acknowledgement, jurat, description of the document, name and address of the signer, method of identification used, fee charged, if any. Maintaining accurate and complete journal entries is a legal obligation and provides a crucial audit trail. It protects the notary from liability and assists law enforcement in investigations of fraud or forgery. Identifying red flags. Notaries in the financial industry must be vigilant in identifying red flags that may indicate potential fraud or coercion. Recognizing these signs is crucial for preventing illegal activities. Common red flags include signers' reluctance to show ID or provide proper identification. Document appears altered or incomplete. Signer seems confused, disoriented, or under duress. Unusual pressure from a third party to rush the notarization. Document contains unusual or suspicious clauses. If a notary encounters any red flags, they have a professional and ethical obligation to refuse the notarization. Proceeding under suspicious circumstances can lead to legal liability and aid in fraudulent schemes. Preventing common notary fraud. Notaries are on the front lines of fraud prevention in financial transactions. Understanding common types of notary fraud helps them protect themselves and the public. Common fraud schemes notaries might encounter include identity theft, signer impersonation, document forgery or alteration, duress or undue influence on the signer, false acknowledgements or jurats. To prevent these, notaries must rigorously follow identity verification procedures, ensure the signer's voluntariness, and meticulously complete their notarial certificates and journal entries. Diligence is the best defense. Maintaining secure notary records, particularly the notary journal, is a critical aspect of a notary's duties. These records contain sensitive personal information and serve as legal evidence. Notaries must store their journals and notary seals in a secure location, inaccessible to unauthorized individuals. This prevents tampering, theft, or misuse of their official tools and records. Proper record retention also involves understanding state-specific requirements for how long journals must be kept and how they should be disposed of when no longer needed. Compliance protects both the notary and the public. Introduction to RON, Remote Online Notarization. RON allows a notary public to perform notarial acts for a signer who is not physically present, using audio-visual technology over the internet. This modern approach offers convenience and accessibility. RON involves a secure online platform that facilitates identity verification, live audio-visual communication, and electronic signing and sealing of documents. It adheres to strict security and legal standards. The adoption of RON has accelerated, particularly in the financial industry, enabling remote closings for mortgages and other transactions, especially beneficial for geographically dispersed parties. RON technology and platforms. RON relies on sophisticated technology platforms designed to ensure the integrity and security of the Remote Notarial Act. These platforms incorporate advanced features for identity verification and secure document handling. Key technological components include multi-factor authentication for identity verification, credential analysis, e.g. KBA biometric scans, audiovisual recording of the entire notarial session, tamper-evident electronic seals and digital certificates. These platforms are built to comply with state and federal regulations, providing a secure and legally compliant environment for remote notarizations. They are regularly audited for security and functionality. Legal compliance for RON. The legal landscape for remote online notarization is evolving, with many states enacting specific laws to authorize and regulate RON. Notaries must ensure they are commissioned in a state that permits RON and understand its specific requirements. Key legal considerations for RON include jurisdiction of the notary and signer, approved RON platforms, specific identity verification methods, journaling and record-keeping requirements for electronic acts. Compliance with these laws is paramount. Notaries must stay updated on legislative changes and ensure their RON practices align with both their commissioning state's laws and any federal guidelines impacting financial transactions. Impartiality and conflicts of interest. Impartiality is a cornerstone of the notary public's role. A notary must never have a financial or beneficial interest in the transaction being notarized, nor should they be a party to the document. Any perceived or actual conflict of interest undermines the integrity of the Notarial Act and can lead to the invalidation of the document. Notaries must recuse themselves if a conflict exists. Confidentiality and privacy. Notaries handle sensitive personal and financial information. Maintaining strict confidentiality and protecting signer privacy is an absolute ethical and legal obligation. Notaries must not disclose any information learned during a notarial act to unauthorized third parties, nor should they discuss the contents of a document. The information is strictly for the purpose of the notarial act. This includes safeguarding notary journals and any other records containing personal data. Compliance with privacy laws, such as GLBA in the financial sector, is essential for protecting consumer information. Notary best practices in finance. Beyond legal compliance, adopting best practices enhances a notary's professionalism and efficiency within the financial industry. These practices build trust and reduce errors. Key best practices include maintaining a professional demeanor and appearance, clearly explaining the notarial process to signers, using a high-quality, clear notary seal, regularly updating knowledge on notary laws and industry trends, carrying adequate errors and omissions, E&O insurance. Adhering to these practices not only ensures smooth transactions, but also protects the notary from potential liability and enhances their reputation as a reliable and competent professional in the financial sector. Becoming a certified notary. To become a certified notary public, individuals must meet specific state requirements, which typically include age, residency, and a clean criminal record. The process involves application, training, and passing an exam. Steps to becoming a notary generally include reviewing state notary laws, completing a state-approved notary education course, passing a notary exam if required by state, submitting an application and bond if required, receiving the notary commission. For those aspiring to work in the financial industry, additional training or certification, such as a notary signing agent (NSA) certification, can be highly beneficial. This specialized training focuses on loan document signings.